SoFi Technologies Inc. is currently trading at exactly $25.19 USD, showing a strong intraday movement of plus 0.28, which represents a 1.12% gain for the session. If you've been watching the ticker tape today, you are seeing something that defies the skeptical gravity that held this stock down for years. The expectation from the old guard on Wall Street was always that SoFi would eventually hit a ceiling, that it was just a glorified student loan shop wrapped in a fancy app destined to be crushed by the sheer weight of legacy institutions like JP Morgan or Bank of America. They expected a reversion to the mean, a slowing of growth as the law of large numbers kicked in, and a permanent valuation discount compared to true tech darlings like Nvidia stock or Apple stock. That was the narrative. But the reality playing out on the charts right now is violently different. What we are witnessing at this $25.19 level is not just a price appreciation, it is a fundamental repricing of the company's identity. The market is finally waking up to the fact that SoFi isn't just building a bank, they're building the AWS of Fintech, and the Q3 2025 earnings report we just digested is the smoking gun that proves it. The reality is that SoFi has transitioned from a cash-burning disruptor into a GAAP-profitable powerhouse, effectively decoupling itself from the volatile swings of Tesla stock and moving towards the consistent compounder status of a mature financial giant. Let's look at the immediate price action we are seeing today. That 1.12% move might seem modest in isolation, but you have to view it in the context of the last 6 months. We are sitting near a 52-week high, having rallied significantly from the lows we saw back in April 2025 when the stock was languishing near $8.60. To understand why we are sitting at $25.19 today, we have to look at the volume. Institutional accumulation has been relentless. We aren't seeing the erratic retail pump volume that characterizes Robinhood stock trading during a meme frenzy. We are seeing steady, high-value block orders that suggest pension funds and large asset managers are finally taking positions. This is the difference between a trade and an investment. When you see Fidelity Investments or Vanguard increasing their stake, it stabilizes the floor price, and that is exactly what has allowed SoFi to hold these higher levels despite the broader market jitters. The volatility has tightened, suggesting that the weak hands who bought in during the SPAC days are gone, replaced by long-term holders who see the vision of a fully integrated financial super app. The catalyst driving this current momentum is undoubtedly the Q3 2025 earnings triple beat. Expectation was for a modest beat on revenue and perhaps a slight uptick in earnings per share. Reality? SoFi delivered record net revenue of $962 million and a staggering net income of $139 million. This isn't accounting gymnastics, this is operating leverage kicking in. For years, bears argued that the cost of acquiring customers, the so-called CAC, would eat SoFi alive. But look at the cross-buying stats. The financial services productivity loop strategy is actually working. When a user joins for SoFi Money, their checking and savings product, they don't just sit there. Within 6 months, a statistically significant portion of them open a SoFi Invest account or apply for a SoFi credit card. This lowers the aggregate cost per product and explodes the lifetime value of the member. This is the flywheel effect that everyone talks about, but few companies actually achieve. It's the same ecosystem stickiness that makes Apple stock so formidable. Once you are in the walled garden, life is just easier if you stay there.